You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back. It is Thursday. It is time to talk some futures options. It is time for TWIFO. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks are binging these days. And man, speaking of bingeable content, hopefully you checked out the one-of-a-kind volatility deathmatch that we had over there on the Pro. Theoptionsinsider.com/pro is the place to go to hear it for yourselves right now. Of course, our Pro members got to send in questions. They got to determine the victor. It was Dr. Vix taking on the Vixologist in a volatility battle for the ages. Two men entered. Only one could leave. Tune in. You got to see who won. No spoilers here, listeners, but it was something to behold and or listen to. So wild stuff out there, listeners. Hopefully you checked it out. If not, yet another reason you need to be heading over to the Pro to learn more. Of course, a whole boatload of other stuff there. Hundreds of episodes of Pro Q&As, options, oddities, live streams, great giveaways, exclusives. You name it, it's hanging out for you over there on the Pro, including right now, the volatility deathmatch. And let's see who's joining us on the old CME Group hot seat today. I'm pleased to welcome back on. It's been a little while since we chatted with him. Over a couple of months, actually. Our good buddy, Mr. Scott Bauer from Prosper Trading Academy. Scott, welcome back to TWIFO, sir.
Thank you for having me, Mark. It has been a little bit of time.
How are things in Prosper land? We talked to you about a week before the big nadir in the equity market. So how have things been in Prosper since then, sir?
You know, the trade through April and the first part of May, it was fast, frenetic, lots of opportunity. And then, over the last several weeks, as we've seen volumes really dry up and volatility really kind of move down, the trade has been okay. There haven't been, in my opinion, quite as many opportunities. but it's all good. It's all good. Just, changing dynamics in the marketplace.
Let's go check out some of the dynamics right now, listeners. It is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show where we tell you everything lighting it up to the light side, aka the upside, and to the downside over there at CME Group this week. We always tweet out as well a big chart of everything for the week over there at CME, so you can see for yourself how the trends are shaping up. And if you look at this chart right now, it is pretty heavily biased to the light side this week, listeners. Only, I would say we could do a bottom 10, maybe. That'd kind of be about it. Everything else is green, listeners, including our largest percentage mover. Can you guess what it is? Spoiler alert, if you listened to the Futures Rundown yesterday, listeners, then you should have some inkling out there right now. But a wild time out there. Scott, not a lot of dark side, but a heck of a lot of light side. You think you can handle a little bit of a breakdown of the light side and dark side for our listeners this week, sir?
Let's have at it. I'm going to start dark side here.
All right, there's not much of it, so it won't take long.
Yeah, no, it won't. No, it won't at all. Starting at number 5, soybeans. Soybeans down 1.14%. Copper, which was on the light side last week, up almost 6%, down 2.17%. SRW wheat down 3.35%. HRW wheat just ahead of that, down 3.5%. And the leader in the clubhouse on the dark side, which was also on the light side last week, Natty Gas, down about 4.5%.
All right, yeah. What little dark side there was, listeners, you pretty much just heard about it. The rest of it, not much to speak of unless you're really excited about corn or oats being off about 0.5%. Yeah, there's not much red to be found. I think you got to go into the yen USD off about 0.03%, Scott. How sexy is that? I mean, that's about...
and we're just moving on from there, right?
There's you're really scraping the bottom of the barrel with the lower half of that bottom 10. All right, Scott, let's light it up. What's tearing up the screen to the light side this week, sir?
Well, in 5th place, we've got Bitcoin, and we know it's a little bit off those highs from where we saw, but it's up about 5.5%. And last week was number 2 on the dark side. Brent FSM up 6.5%. Palladium, piling on its gains from last week, is up another 6.76%. I'm surprised that this one's not number 1. I bet if you asked a lot of people, they'd say this would have been 1. But WTI, West Texas, up 7.73%. But the number 1 on the light side, platinum, up 11.74%. And that's building on its gains last week of about 4.5%.
Yeah, a wild week in platinum. We were talking about it on the Futures Rundown yesterday with Carly Garner. She thought might be a little bit of squeeze action going on to some of these metals out there. But yes, a wild week for platinum. Also a wild week for WTI. Spoiler alert, might get to both of those on the show in a little bit. Before we get there, listeners, let's break down the CVOL movers and shakers for the week. What's lighting it up on the vol front this week over there at CME as well? It's not all underlying, listeners. Let's get to some of the vol action. Remember, you can run this report for yourselves anytime you want. CME Group and CVOL, type those both into your browsers. Then set the high-low range to 1 week, and then go for the aggregates tab, and that will get you effectively the 1 week in CVOL report. Let's start with the energy aggregate CVOL. And by the way, we got a bit of a mixed bag. We got a little more than half of our candidates this week pinning the needle to the downside from a vol perspective, which again, heading into the start of the summer, kind of what you'd expect. Then we got a few outliers out there, like our number 1 here, energy, pinning the needle to the upside right now. When you hear those WTI numbers, you're probably not surprised by that. The energy aggregate CVOL, nearly a 56 right now, 55.92, up 3.63 points just today. Popping hard today. That is the high for the week. The low, 52.19. So getting some juice back on the energy front. Below it, we have the aggregate commodities CVOL, 37.37, up about 1.5 points today. That is also the high for the week. The low is 35.89. So those are our two pin in the needle to the upside this week. Then below it, we have the aggregate ag products CVOL, kind of a mixed bag there. 20.28 right now, off about 0.2 or so today. Not the low for the week, though. The low for the week was 19.96. The high, 20.47. So kind of hanging out in the middle to upper portion of its very tight weekly range there. And then the rest of them are all pinning the needle to the downside, listeners. Let's start off in the treasuries. The treasury price vol at about a 6.07 to be precise. Off about 1/4 point today. So 1/4 point when you're starting at about a 6 handle is actually a pretty decent move. That is the low for the week. The high 6.73. So treasury price vol coming in nearly 3/4 point this week. Again, that may not sound like much when you're talking about, energy or some of these other more volatile asset classes, but treasuries, you're starting at around a 6. So 3/4 point is a big vol move to the downside. Below it, we have the FX CVOL, 8.09, off about 1/4 point today. That is the low level for the week. The high, 9.26. So another one coming in nearly 1.25 points on the week, which again, you're starting a little bit north of 9. That's a pretty big move in FX vol as well. Below it, we have the aggregate metals CVOL, 18.75, off nearly a full point just today, about 0.84. That is the low for the week, the high 20.19. So in spite of all this action we're seeing on the metals front, metals aggregate vol coming back to earth this week. And at the bottom of our list, we have the treasury yield volatility, always the largest number on our list at a 105, pretty much even, off 3.16 points just today. That is the low for the week, the high 115.64. So yield vol coming crashing back to earth as well this week. So kind of a tale of two tapes on the vol front. Some things getting a little bit juicier this week and the rest coming crashing back to earth as we keep on rolling with the show. Scott pointed out he was surprised this wasn't number one on our list this week. A lot of eyes are on WTI right now, so we got to head on out to energy first.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody, you know where to go to follow along with the show. CMEgroup.com/TWIFO, TWIFO, /TWIO should get you there as well. Once you're in that asset class drop down, you're going to pop down 3 slots to energy. Then in product family, you're going to go crude oil, and that will find you at our old pal WTI, 68.29 right now, up nearly 3.75 points, or almost 6%, about 5.75% just since Monday. That's when these reports kick off. But if you go back to the end of our show last week, listeners, WTI is actually up nearly 8%, 7.75%. So let's start there, Scott. You sounded like you were surprised at the top of our show that WTI wasn't in the top spot. And then what do you make of this pretty strong move to the upside we're seeing in WTI this week?
Well, there's certainly a lot of geopolitical news that's out there kind of rearing its ugly head right now that, if, God forbid, something escalates in the Mideast, then we, probably see crude move even higher. I even saw some reports this morning saying, we could see crude West Texas as high as 130 if something were to happen. I'm not so sure about that. Leading into this, I have been a sell the rally in crude for months and months and months, just because we've got more supply coming to the forefront. Demand is not really, historically where it should be. But obviously this is one of those, extraneous black swan type of events that could really move this market big time.
130, you say? That might explain some of those DSPARs we saw going up this week, but we'll get there in a second, listeners. Yeah, yep. 130. That would be a wild level, especially coming on the heels of an administration that rolled into office chanting "drill, baby, drill," right? It didn't seem like the impetus was to the upside in crude. And of course, the trade war adding to that, just annihilating all demand for crude. All it takes, though, Scott, a little bit of a dust up in the Middle East, and all of a sudden people are like, yeah, this this crude stuff looking a little cheap.
Yeah, that's right. And you mentioned those D's pars. I see 38,000 of those open interest.
Yeah, that's a wild trade. Let's get to that now, listeners. What are we seeing out here in WTI this week? Like a lot of products, especially this week, because a lot of the action was kind of front-loaded this week. We're seeing a lot of the options action front-loaded as well. 34.5% of the nearly 1 million contracts, 930,000 contracts. It's been a little while since we've seen WTI sniff 1 million contracts in a week. So this is a pretty active week. About a third of that, a little more, going up in the July contract. Only has 4 days to go. I get it. We're popping hard this week. People want to dive into the high gamma, high bang for your buck contracts. The vol there is at about a 41, up a whopping 13 points. But of course, that's mostly gamma. Let's go out a little bit, listeners. Let's go out 30 days. How about that, listeners? Let's go out 30 days to roughly to the August timeframe. The vol out there, a little bit more reasonable. Still up quite a bit this week, up about 8.5 points, but the vol there at about a 39.5. Skew-wise, as you might imagine, last week it was wild, listeners. On these July calls, they were 14.5% bid. The puts were nearly 11% discounted. So the options market was sniffing that something was up to the upside last week. This week, folks have mostly bailed on that. It's pretty much back to flat in both directions. And that's probably why the number one most active contract this week were these 70 calls expiring in 4 days in July, trading 35, almost 36,000 times this week. And the reason why that skew came crashing back to earth, it seems like folks were bailing on these things all week long, selling 5,000 on Monday, 4,100 on Tuesday, nearly 15,000 yesterday, and about 11,000 today. There's about 14,000 left open. I got to imagine some folks may be hitting the exits on those sometime in the next few days as well. If you're wondering prices on those, they were trading coming into today right around 60 cents, 59 cents out there. So still a little juice on those. If you're sitting on some and you want to get the heck out of Dodge, only 4 days to go. So maybe now is the time to get while the getting is good. Probably also why that vol skew has come crashing back to earth here. Unless you think we can blow through the 70 handle in 4 days, which, if something pops off over the weekend, certainly we've seen a lot of literal weekend risk in these markets. Something pops off with Iran over the weekend, maybe you'll be more of a fan of buying those bad boys out here. Either way, listeners, right around 60 cents is your big print. But Scott, I want to get to these as well, because what you said kind of shines a little bit more light on these. If you go all the way out to December, in fact, one of our number 2 or 3 most active contracts on the week this week, listeners, are the DSPAR calls, trading 18,000 times this week. By the way, vol out in D's about 34 1/3, up 3 1/4 points. So obviously going out to December, a little bit calmer, cooler, saner heads are prevalent out there. In terms of D's, the calls never got as crazily bid out there. So it was obviously pricing in some near-term action in WTI. The calls were 1.3% discounted last week. The puts were 3% bid. That has flipped now. The puts are really exacerbated. The puts are now 10.1% bid, and the calls 6.3% offered. By the way, the future out in D's is at a 63.5, listeners. So people are loading up on the puts, and so that makes a little bit more sense. Why would the call wing come crashing back to earth if people are slinging a bunch of these DSPARs, Scott? And so we did a little digging, and it looks like it was actually a size 1x2 that went up in December, where we saw paper buying one of the DS90, Scott, selling 2 of the DSPARs, and doing that for size all week long, including, looks like the big day for it was Wednesday, about 7,000 by 14,000, but they piled into some more of the rest of the week. So 19-cent credit, Scott, D's 90-100. You like that? Or if your 130 prognostication comes to pass, you might be wearing it on that, Scott. What do you think?
For a trade like that, a position like that, I would much rather be long the 2 part. So selling a 90 and buying 2 of the 100s. And the reason being is we know what the skew is like. It's almost very similar to to like the VIX, where on the upside, if there is a spike, if there is some event, that skew is going to just, in my opinion, it is going to explode. I'd much rather be long the two contracts than the one.
Yeah, definitely. It's kind of like VIX. If you got an asset you think might explode, you definitely don't want to be net short units out there. You want to kind of go, I'd pay the 19 cents, take the flyer, right?
Yeah, if given the choice in that one, I'm definitely paying the 19 cents on that.
And they could obviously have it against futures too and kind of do it as more of a bit of a, it's not quite stock repair because it's out of the money, but it's a little bit of a kind of out of the money ratio vertical that way as well. And then you're not net short units if you have futures, obviously, listeners. But interesting one. So if you see all these D's pars going up and you're thinking folks are loading up, a little bit different trade out there this week, listeners, going up in WTI. Scott, we got nat gas moving to the downside as well. You want to head out there or do you want to go maybe to metals next? What are you feeling?
We can talk about natty gas.
All right, listeners, it seems like it's hard to get out of a TWIFO show without talking about nat gas. It moves quite a bit, as you see yet again on our list. Listeners off 4.5%, leading the list, a paltry list to the dark side this week, but leading the list nonetheless. That front future hanging out right around exactly $3.50 right now, off about a little over a quarter, about 7.25% since Monday. Go back to the end of our show last week. It's off about 4.5%. And in terms of paper, you know what? Was another quote-unquote explosive week volume-wise. Look what it took to get WTI to hit nearly 1 million contracts. And here we have nat gas doing the same thing, 943,000 contracts. This product just cannot be denied from an options volume perspective. Scott, what was catching your eye out in nat gas this week, sir?
I mean, just looking at that chart and looking where we were just how long ago was it? A month, two months ago or so. Back in actually April. We're right down, settling in kind of at the 50-day moving average. The 200-day moving average is not far below, right around 330 or so. So I would expect some consolidation here. In fact, if those of you that track volume areas, there's a big volume bar right around 3.25 or so. So it looks like we're starting to consolidate a little bit, getting a little bit range bound here. I'm surprised vol is not a little bit higher just on this, kind of drawdown here, but we'll see what happens. But technically we're right at the 50-day with the 200 just below here.
Well, let's see what's lighting it up out here. Again, nearly 1 million contracts on the tape, listeners. Of that, we're heading out to July, 13 days to go. That's where 53% of the paper went up this week. So a lot of action in July out there, over 500,000 contracts. And looks like the vol out here in nat gas coming back down to earth a little bit, 57.33, off about 2.33 points in that July contract. If you go a little bit farther out, if you go out to Dees, it's at about 57.33, actually ticking up this week. So kind of a mixed bag on the term structure here this week. Skew-wise, not a ton to write home about. The calls were 2.2% bid last week. They are now 3.3% bid, so slightly bid. The puts were flat last week. They are flat again this week, which is interesting given the fact that we're hanging out at 3.5 in the futures, and the most active contract was the 3/4 puts. You think some action in those would drive that put skew one way or the other? I guess we had a lot of back and forth action, listeners. 67, almost 68,000 contracts. Again, that is a lot of paper. That's more than multiple entire products do in a week if we add them all up just in those 3/4 puts. The big day actually today, 22,000 of those 3/4 puts going up out there this week, listeners, versus about 18,000 on Tuesday. By the way, the OI right now, 52,000 out there on Globex. So 22,000, a decent chunk, but still, if they're closing, still 30,000 left out there, listeners. By the way, they're trading today, average price of around a nickel. If you're wondering, I mean, it is pretty far out of the money, not that long to go. So maybe you like those as a flyer. Maybe you had some and they've eroded to pretty much nothing. You want to get that final nickel while you can. Either way, a lot of back and forth action on these this week. 17,000 yesterday, mostly closing. 18,500 on Tuesday. back up opening, 9,700 on Monday also opening. So a lot of back and forth action. I don't know, 3/4 puts, listeners, with about 13 days to go for a nickel? You down for rolling that dice, or is that just wasted money for you out here? I don't know, Scott, you like those 3/4 puts with a little under 2 weeks to go for a whopping nickel, sir? Does that get you excited?
No, it really doesn't. It doesn't. I think I can find better places to spend my pennies or nickels, or even on that 1x2 we were just talking about at 19 cents in crude there.
Can't say I don't really love these either. They don't get the animal spirits in nat gas moving in me either this week. Number 2 behind it, we had 50,000 of the 3 puts. So if you thought 3 1/4 might have been a bridge too far, how about the 3 puts going up 51,000 times this week? The big day was Tuesday, 16,000. 16,000 as well, roughly on Wednesday. Opening and closing, so a little bit of back and forth action. 9,500 today and about 8,600. If the 3/4 puts are trading for a nickel, then you know the 3 puts are effectively worthless at this point, listeners. Wasn't all downside, though. A little bit of 4 call action squeezing in there this week as well. 45,000 of those bad boys. The big day again today, 14,000 against an OI of 31,000. 12,000 on Tuesday, mostly opening, and about 9,500 each on Monday and Wednesday. Back and forth, opening to closing there. All those strikes seem kind of wild to me. 3/4, 3s, and the 4s. I don't know. Obviously, nat gas could hit any of those in 13 days, but they just seem like pretty wild strikes. You like any of those? Any of those float your boat, listeners? Either way, we got to get on into another product complex that has stolen the thunder from energy, surprising Scott and maybe a lot of you as well. It is time to talk about the metals.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, listeners, let's get to the metals. We're going to kick things off in the shiny stuff. And Scott, we'll get to the big dog, which is gold, and maybe some of the others in a second. But I want to kick things off talking about a product that, it's not often that I say this. I don't think if we have discussed palladium before on this show, it is so long ago that it really has lost to the mists of time out here. Of course, it was, and we're not going to do it again today. Don't get too excited, listeners. 704 contracts. So palladium, if you were hoping for a little bit of action on the palladium front, listeners, unfortunately not going to do it this week. 704 for palladium. Not bad, listeners, all things considered. That's actually a pretty action-packed week. But what we're actually going to talk about is another product that is another one that I'm hard-pressed to think of the last time we've really discussed it on this show. It's probably been quite a long time, if ever. This is platinum, for the sheer reason that it never really trades much from an options perspective. It's kind of a bit of an also-ran. Not the case this week, listeners. A platinum number 1 to the light side, up 11.75%. Number 5 in the same direction last week, up 4.5%. If you listened to the futures rundown yesterday, which you should be doing if you're listening to TWIFO, very much the sister program to this one. We talked a little bit about what's maybe driving some of this action in platinum, and all that amounting to a heck of a lot of paper. 23,200 contracts on the tape right now. So dare I say it, a respectable, nay, surprising week out here in platinum. Future hanging out at 1284.1, up 116 handles or 9.93% just this week. Obviously, you go back to the end of our show last week, up nearly 12%, 11.75%. Scott, platinum has never really been a big options story. Maybe that's starting to change, sir. Anything catching your eye in the platinum shiny stuff, sir?
Not something that I watch that closely. So, to pinpoint something, I can see what's on the tape, but that's a tough one. That's a tough one. Other than this run up here, not sure really what is behind it. And, there has been, I guess, some unusual volume, lots of volume compared to historically here, which probably is the reason for the move, or the move is the reason for the volume. But there's not a lot really sticking out to me here, to be quite honest with you.
There have been some allegations, and it's difficult to squeeze these large commodities. They're not like a small meme stock. at the end of the day. But that said, platinum not as liquid as some of the other metals out there. Do you subscribe to this notion that maybe there's some squeeze action going on behind the scenes, sir?
Absolutely. There's no question about it. With all the talk of not just precious metals, but what may happen with China and some of the other places, that's probably behind this as well.
All right, listeners. And like we said, a surprising amount of paper going up out here in platinum this week, 23,000. So you actually have a TWIFO report that you could look at for probably the first time here in platinum with some actual volume out here. The vol out here in platinum, again, I don't think I've ever said that before, 30 3/4, up 2.7%. That's out in the October timeframe. That's where 45%, so nearly half of that explosive 23,000 contracts going up in October, 97 days to go. So they want a little bit of time to work here. Not a big 0-day product here on the platinum front. Skew wise, obviously, if we're talking squeezes to the upside, we're probably going to see some interest in the call wing, and that is the case. The calls last week were already pricing in a hefty 12.2% premium over that 30 3/4 level. This week, that premium has increased to nearly 14%. The puts, 5.9% discounted. So I will say, even if you're not a platinum head, that kind of skew setup is very favorable for a collar. So if you are intrigued, if you like picking up a little bit of the underlying, you don't mind putting on some tight protection against it and maybe selling some out of the money against it as well to finance everything. You're getting a premium for the calls. You're getting a discount for the puts. That is music to the ears of collar traders out there. So if you were inclined to look at some collars and platinum, perhaps now is the time, as long as you're okay giving up maybe some of that upside. If it is exploding to the upside, maybe you don't want to. And that would also explain why, listeners, a lot of this action we're seeing out here this week is centered on the puts. With the contract going away in about 6 days, that has the 11.5 puts trading 1,000 times. If you go out to the AUG contract 34 days to go, 10.5 puts. Again, we're hanging out at a 1291 in that future. But the big dog of the week is the 1,100 puts in October. So again, nearly 200 handles out of the money at this point, 191 handles out of the money. Puts trading 24, almost 2,500 times this week, going up for prices around $24. So if you're wondering, what does that cost if you wanted to roll those bones to the downside? Or, again, those puts they're not that juicy, so maybe you want to be a little bit judicious selling them. But if $24 sounds like a hefty bonanza to draw a line in the sand on the 1,100 strike going out to October, again, that's nearly 100 days, listeners. I'd be judicious drawing lines in the sand for something for nearly 100 days that is getting squeezed to the upside. Obviously, it could fall right back through those strikes again. Just letting you know, those ACH 1,100 puts trading for $24 right now, Liz. I'll let you decide whether you think that is worth buying or selling or staying the heck away from. Scott, anything else catching your eye in the metals this week, sir?
Obviously, the continued rally in gold, but one thing that really stood out to me is, we've been looking at the gold-silver ratio, which historically over time trades, somewhere 60, 65 to 1 or so. And that thing got up to like 110 to 1 last week. And then with the big silver rally that we saw a couple days ago, that ratio was down to about 90, 92 or so. So there was definitely, from a historical basis, it was really set up for silver to start ramping up, at least compared to gold. I know that's muted a little bit right now, but I still think that ratio has to come in a little bit. But there's a lot of volatility and some volume going on there in those precious metals.
Yeah, silver has been a wild thing to watch over the last few months. A lot of our listeners who had some silver were lamenting. They saw gold hitting new all-time highs and silver selling off, and then gold retreating from those new all-time highs and silver still selling off. And then finally, silver turning around and rallying. You're right, probably some of that having to do with just maintaining some of that gold-silver ratio out there. But yeah, a fascinating thing out there. Is gold fascinating this week, listeners? Gold actually kind of light on the volume front. Usually we expect around 250,000 contracts on a decent week, 190 on the tape right now, so kind of light. hanging out north of 3,400 again. So Scott, we haven't talked to you since this whole gold madness really kicked off. I mean, the last couple of months, we saw gold run all the way north to 3,500, I think 35.5, somewhere in that range, 35.40, fall back out of bed, back below 3,200, and now making another leg up to 3,400. Do you guys sling a lot of gold out there at Prosper? And what's catching your eye as we've been vacillating all over the place, new all-time highs and then right back down again and now climbing back up again?
You know, we typically use GLD, which is an ETF. On the option side, that is really the way to go. And I would say for the last 3-4 months, we have been buying the dip. In every interview I've been on that we talk about gold, this is just the perfect environment to buy a dip. I don't want to buy into any of the rallies, but when you get a little bit of a sell-off, a 1-2% sell-off, boy, if you've done that since, really kind of end of last year, beginning of this year, you've done really well. So we are trading that quite a bit, and you got to respect it. At some point, that's going to stop. But for right now, the buy the dip trend here is certainly paying off. And are we going to hit that high of 35.10? I think it was again. Probably. I don't know if it's going to be next week or down the road. Obviously, if something happens, if there's some escalation in the Mideast, we may see that sooner rather than later. But GLD has been a great one.
Yeah, it's been a wild run in gold. If you listen again to the Futures Rundown, we do our year-to-date trends in gold up there, right around number 2, the best performing futures assets of the year. So looking pretty good out there on the year. Obviously, if it retests those new all-time highs, might take the number 1 spot again. Again, not the most active week out here. About 30% of that lighter paper going up in the July contract, has about 13 days to go. A gold vol hanging out at about 1840, up about 1.1 points. So that's actually not bad for gold vol. We've obviously seen it get much lower. Obviously seen it get higher as well. So not a level that is too remarkable to me, but interesting. Skew-wise, the skew right now not pricing in a lot of anything, which is kind of interesting. For a while now, as we got to those new all-time highs, we kind of saw the bid for gold calls kind of vanish, which is unusual for gold. Usually the premium is always to the upside. So when you see that, you kind of have to be careful. And then, of course, we saw gold drift lower as a result. And now it's starting to climb back again, but we're not seeing that premium really in the calls. Last week, the calls were 4.3% bid, and this week the calls are 2.1% bid. So historically for gold, from a call premium perspective, that's not much. The puts 3.3% discounted last week. I will say the puts have come back to flat, so maybe there is a little bit of interest in those puts more so than last week, but again, they're flat, so it's kind of hard to get too excited one way or the other. Maybe right now, the gold options market is telling us we don't know where we're going. We're kind of vacillating around here for a little bit. If you go longer term as well, usually gold likes some longer term paper. And if you go out to Dees, there is a little bit more of a bid for those calls, which you would expect. But it's not even 7%. It's about 6.7%. The put's about 3.6% discounted. So that's more along the lines of what we expect from a historical gold skew. But even then, it's kind of light. And if you're wondering volume-wise and price-wise what's going up this week, it is the 3,500 calls. So, Scott, no surprise, that magical, mythical 3,500 level that we broke through last week is dominating the tape. But I use dominating in air quotes because it's a much lighter week than you might expect. It only cost you 7,100 contracts, listeners, to break into the number 1 spot in gold this week. That usually requires a lot more paper. And if you're wondering right now, listeners, the July 3,500s in gold trading for around $17.50, Scott. Do those excite you at all with about 13 days to go, sir?
You know what? If you look at the tape today, Mark, and I'm looking right at those 3,500s, it almost looks like there was a big roll today, a spread to 3,500, 3,550, because one looks like it might be closing, and they're pretty much the same contract volume. So I like that spread. Do I like buying those 3,500s at 17.5? To me, that's a little bit juicy, but I don't mind that spread. That's for sure.
Yeah, that does seem a little rich. You're right. And I'm looking now, and you're right. There is most of that action for both of those strikes, listeners. 3500s and 35 halves is pretty much stockpiled today. About 5200 of the 3500s against 4500 of the 35 halves. Worth noting, not a lot of OI on the 35 halves and about 5500 open on the 3500. So it certainly could be a roll. I'm with you, Scott. That does seem a little rich, $17.50, but you can't say no to any upside at this point.
No, definitely not. Definitely not. That's again that buy the dip until it doesn't work. That's my strategy in there for now.
So those 35 halves, Scott, are right around $10, $9.90. So you're talking $7.60 for that $50 vertical. Does that price level float your boat? Is that still a little too rich?
It's rich, but I'd rather do that than buying those 3,500s outright.
Definitely. I definitely can get behind that. So listeners, would you prefer $17.50 for the 3,500 straight up with a little bit less than 2 weeks to go, or more of that vertical action, which seems like how it went up for around $7.50, $7.60 to be precise out there? Either way, nothing's cheap. Again, it's upside in gold, but intriguing stuff nonetheless. All right, Scott, we talked some shiny stuff. We talked some explosive stuff. What else is on your radar this week, sir?
I mean, it's hard not to be focused on these. It's also hard not to, just look at being so close to the all-time records again in the S&Ps and the ES. I will tell you that one thing that I noticed, because I follow the equity side of futures options pretty closely. And if you look at the NASDAQ, the NASI options, in the last week, over 80% of the volume that has traded has been in short-term, less than 5 days expiration. So that tells me that maybe some people are looking for some really big moves here coming up pretty quickly.
All right, listeners, sounds like we should finish up the show in the equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, welcome to the equities. Go into that drop-down list, pop out of the metals. You're going to go up about 3 slots to equity indexes, then we're going to go into U.S. Index E-mini. And as Scott pointed out, it's just an embarrassment of riches in the near-dated contracts in any of these major equity indexes right now. You look at the S&P. If I do the quick math right now, the contract expiring in a few minutes, listeners, we have 21% of the week's volume, which again is about 2.66 million contracts. If you add in tomorrow's paper, the stuff going out tomorrow, that's another 15%. So you're already at 36%, so over a third. Then you add on another 10% if you go out a total of 4 days. You're talking 43%, so nearly half of the paper in the S&P is expiring in 4 days. And that is far from abnormal. That is pretty much the norm these days. So a very different environment out there in the major indexes, listeners. If we go to the NASDAQ, as Scott was pointing out, it's even more front-loaded. NASDAQ, we have about 156,000 contracts on the tape. Over a third, 36%, is going away in a few minutes. You add on tomorrow's paper, that's another 15%. So now you're already at over 50% just in the next 24 hours going away, listeners, from an options volume perspective. So, Scott, I was talking to some folks down at the options industry conference about, different analytics tools and packages and back testing. And they were saying, in light of this 0-day phenomenon we've seen over the last really 3+ years, you kind of have to almost go back. If you're looking at back testing a lot of equity index strategies, you have to almost throw out any back test that is prior to the advent of the 0-day era, because things trade so differently now. They're so front-loaded now that it changes the performance profiles and everything else. And it really has just changed the game from an equity options perspective. Do you agree with that? And has this remarkable front-loading in the equity options, has it changed the way you folks trade over there at Prosper?
I mean, it really does represent an incredible amount of the volume, these 0 days. And, there's such a binary nature to them. For someone like me, I've been doing this for 35 years. I like the 0 DTEs, but I don't trade them just as a, lottery ticket, which I would not suggest anybody does. But I will trade them against buying other contracts, whether it's a day, a week, 3 weeks down the road, because they are so front loaded that it does give you the opportunity to hedge a position. But it really, when you talk about, Mark, looking at things and evaluating and back testing, I agree with you. Even 3 years might be too many. Maybe it's 18 months because it's just so recently where the 0 DTEs have become actually almost the majority of the contracts that have traded out there. So it definitely changes the landscape.
What's funny? No one ever really even thought about backtesting intraday strategies before until the advent of this. And now folks have to, a lot of the backtesting systems were closed to close. So you literally couldn't do it. And so that's required a lot of updates to the plumbing behind the scenes. It's been a sea change in the way folks look at and trade their options, listeners, which is fascinating. Speaking of trading their options, Scott, obviously since the last time we chatted with you, we've seen a massive rally across most of the major indices. We're back to pretty much flat for the year, if not up, close to all-time highs again. I'm sure a lot of our listeners want to know, at these levels, S&P, NASDAQ, what are you thinking? What are you feeling? What are you up to out there in terms of trades?
I think volatility is too low. Now, I know it's summer trade. I know vol, was so much higher 4 weeks ago, 6, 8 weeks ago. But where vol has settled in right now, which is pretty typical for this time of year, I just think there's way too many exogenous events that can happen. Anything from geopolitics to interest rates to the Fed to, maybe a tweet coming out about tariffs. So, someone that wants to stay in this market, and I do think that the fundamentals of the markets are really not bad here. But you got to buy protection, whether you're buying some downside puts or you got to buy some volatility against a portfolio. At least for me, you have to. Yes, it is summer trade, and we know the volumes have been down. But again, there's just way too much that can light this market up in a nanosecond.
We'll stick to the NASDAQ this week just because we don't get a chance to talk about it too much, and it's easier to wrap our heads around 156,000 contracts than it is the roughly 2.6 million, of which a good chunk is out of the money puts that are going away of the dodo in a few minutes. Like we said, NASDAQ even more front heavy and is not immune to the put bombing. 21,600 puts. We're at 21,940 right now, listeners. So 340 handle out of the money puts are dominating the tape out there yet again. But if we go a little bit farther out, we go out to even July, 49 days, which is an eternity out there. The future at that level, listen, again, about a 22,168. We've got some interesting upside lighting up the tape out there, listeners, in terms of the 23,000 calls, going up a couple of thousand times this week, including about half of that, 1,040 today. That's all opening. And then about 550 each Tuesday and Wednesday. So 23,000. Looks like 24,000's also trading today. So it looks like we have a bit of a vertical, 23,000, 24,000 vertical in the NASDAQ going out to July, 50 days, listeners. Looks like there is no OI to speak of, really, on either of these strikes. So it seems like it is definitely opening paper. Let's see if we could find some prices for you on this one, listeners. Well, as I do that, Scott, that vertical, does that float your boat going all the way out nearly 50 days for a 23,000, 24,000 vertical in July in the NASDAQ, sir?
I'd much rather buy it than sell it.
Any other trades or anything else lighting up your tape in the S&P or the equities right now, sir?
There was a lot of, in going back to kind of the 0 DTEs, if you look at the tape in the ES, boy, there was a lot of buying, especially early on this morning when the market was, started off negative and just kind of flatlined. A lot of buying of the 60-40, 60-45, 60-50s expiring today. So again, you talk about, someone that wants to get that bang for your buck and having things front loaded. That's one of them for sure, if you look at that on the tape. So those were really, really busy today.
Sounds like a day that ends in Y in the 0 day in the S&P 500, Scott. People always rolling the bones to the upside. They're looking decent right now. They're flirting with some of those strikes. And we all know end of the day is where things get wild in the 0 day. So we could easily blow 10, 20 handles through those strikes, or we could be back at 6,000. So, yeah, it's very much that kind of game, listeners. By the way, if you missed that chart I tweeted out from OIC from our buddy Henry Schwartz, the flow master there, showing where these options are executed in the S&P 500 in 0 day. Very surprising. Every 15 minutes, like clockwork, big spikes of volume. So obviously the algos have all been tuned to execute at pretty much exactly the same times, which now that Henry has let the cat out of the bag, I think they're going to be changing that. But kind of fascinating stuff. And also, as you would expect, the big spikes of volume at the beginning of the day and at the end of the day. So we'll see what happens to those folks loading up on 60, 40s and 45s and 50s. They're looking decent right now, at least the first two. We'll see if the options gods smile upon them at the end of the day. And Scott, if folks are smiling on you, they want to check out All Things Prosper, where should they go? What should they do?
Thank you, Mark. Yeah, prospertrading.com. You can come trade with us, myself and other professional traders that have been in this business for a really, really long time. We are working with our students, trading with them live through the day and explaining kind of what's going on, different strategies. And that's where we are, market hours every single day.
There you go, prospertrading.com. You know where to go to check out our reports and everything else cooking over there at CME Land. CMEgroup.com/TWIFO, TWIFO will get you past the front door. And while you're there, you can check out a whole bunch of other great stuff. Education, research from Eric and the rest of the team over there. Lots of great stuff. But kick it off, CMEgroup.com/TWIFO. And while you're checking things out, make sure you check out the Volatility Deathmatch, a one-of-a-kind piece of content, if ever there was one. Hanging out on the Pro, theoptionsinsider.com/pro to check that out, as well as literally hundreds of other great bits of fun up there. Giveaways, live streams, all kinds of fun. Theoptionsinsider.com/pro is the place to go to learn more. We'll be back tomorrow on Vol Views. Did Dr. Vic survive to make it to the show? We'll find out tomorrow, as well as some other special guests. And then, of course, rounding out the week for all of our Pro members with Options Oddities. Unfortunately, next Thursday is a holiday, so no TWIFO next week. Back again in 2 weeks. Another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.